I realized that my gifts and my talents and the vehicle that I could use to make money not matter was to buy passive income assets, to buy real estate. And we kind of have a secret weapon. You have to be intentional about your priorities and, very intentional about your time management in order to manage it all. We believe that the more people you serve, the money follows.
But we also have a lot of investors who really enjoy learning more about real estate.
Actually, that's why we named our company Servio. Servio means to serve. Our mission is to provide opportunity and abundance to our partners through value-creating real estate investments. We have the ability to look at properties in a unique way. I said I need to scale this up even more. These were just friends and family, and that was very successful. It kind of gave me a taste of what I could do. That's kind of what wakes up and drives me. I like providing opportunities to people. I got 5 kids. You have to be intentional about your priorities and, very intentional about your time management in order to manage it all.
Welcome back to another episode of the Fundication Show. My name is Kalani Michelle, and I am here with my co-host, Christian Sadler.
Hey, everybody.
And we have 2 special guests today. We have Ryan and Bress with Servio Capital. And before we hand it over to Ryan and Bress to introduce themselves, Christian would like to tell both of them a little bit more about what we're up to at PREIshare.
Well, as a matter of fact, what I would like to do, because you guys just went through the sponsor approval process, I would love for you guys to maybe explain what that process was like and then share for the audience so that they get to hear it from a different point of view. What do you know about PREIshare right now as far as what we offer for you as a real estate sponsor and for the market as a whole?
Yeah, no, it was actually a painless process going through. It's basically qualifying us as sponsors and making sure that we have that you guys are offering your investors qualified people to invest in. And so there's certain levels of due diligence that were, questions that were appropriate to ask that, we were able to answer. And it took maybe a week and a half, and then we were approved. PREIshare, to our understanding, is just providing really a solution to some of the equity needs for a lot of these sponsors in the area. So I want to thank you guys, first of all, for having us on, and second of all, for the service that you're providing to both your investors and to your syndicators.
Yeah, absolutely. And you nailed it. We want to kind of do some of the upfront due diligence so that when we're offering you our financial services, we're protecting our investors into the fund with what we're doing. And so we have top off services and pref equity, basically the equity, like you said, in the times of need when you guys, are either finishing up a raise or have unexpected costs. And then on top of that, one of the things that we feel like is going to be the biggest change overall to the market as a whole is our liquidity service. We are creating a marketplace where fractional owners of real estate can sell those on the open marketplace, essentially to accredited investors, of course, because you guys have rules that you have to follow as well. And on top of that, as a fund, we are going to be buying those fractional interests. And so essentially creating immediate liquidity for somebody that you might have into your deal. Previous transaction, you don't necessarily want to have to go backfill when you're focused on, tomorrow's deal. So we hope to, provide that for you and give a little bit of ease of mind when you're raising capital.
That's excellent. No, I think it's excellent, the service that you guys are offering. You're definitely hitting on a need in the marketplace.
Well, Ryan, I would love for you to, tell our audience a little bit more about you, and whether you want to introduce Bress or Bress introduces himself. Would love for both of you to let our audience know a little bit more about Servio Capital.
Yeah, from 500 feet up, I'm the CEO of Servio Capital. Bress is our managing director of equities. We have 200 million in assets under management, and kind of our mission is to provide opportunity and abundance to our partners through value creating real estate investments. We kind of have a secret weapon, and that's the ability to look at, and you'll see when I kind of go over the properties in a second, but we have the ability to look at properties in a unique way where we can pull out the most amount of hidden dollars in those properties, whether it's through arbitrage, conversions, or just simply value add. And that's in a nutshell who we are. Bress, do you want to add any color to that?
Yeah, just hi everybody. I'm Bress Bervon, Managing Director of Equity, and we raise plenty of retail capital from individual investors. We also raise institutional capital from family offices and private equity firms. Part of my day-to-day as well is investor relations and, reporting back the performance of the assets that these investors are in, so that they have a clear understanding of where they stand with their investment on a month-to-month basis, but also on the daily basis of working with investors, cultivating those relationships and bringing them. We have a lot of investors who care to be just purely passive and collect their returns monthly, but we also have a lot of investors who really enjoy learning more about real estate. They've got a curiosity. It's obviously an investment that they want to get more into. And so Ryan always says, our secret weapon is, creating more value in a property. But one of his other secret weapons, what I like to call out, is his openness to share his wealth of knowledge and expertise with our investors and with the investor community as a whole. He does a lot of content distribution of educational webinars to help people understand real estate more so they can take advantage of it more and as part of their investment portfolio. So I really think that he stands out in that regard, is just his willingness to open up his brain to everybody.
Thank you so much, Bress. Bress is in line for a raise, by the way. So. I appreciate that.
It's true, because it makes my job easier. I mean, it really, like, bringing people knowledge is a form of wealth, and especially in this environment, just helping them understand the markets we're in and how to really accelerate their portfolios.
Yeah, Ryan, they say that the man on top of the mountain didn't just fall there. How did this all start? How'd you get to this place that you're in now? Well, maybe even what was the first property you ever bought?
Yeah, well, I guess probably my first property I ever bought was a fourplex. And at that time I had just stopped teaching high school. I taught morality to high school juniors, boys. So you can imagine what that was like. But then I had this period of time where I was, kind of working a corporate job, and I was always interested in real estate. And I didn't have a ton of money, and I hated my job. And every day I woke up in the morning and went to sleep, I thought about how much I hated my job, which is not a good place to be in life. And I was driving across the Causeway of New Orleans, which is the longest bridge in the world, I think, over water. China might have a longer one, but it's not over water. But anyways, I digress. And I just gotten chewed out by this customer and about things that my company did that I had no control over, and was thinking about how much I disliked my job. And I stopped, and this bridge is kind of monotonous. It's like, ba-dump, ba-dump, ba-dump. Like, so a lot of time to really be alone with your thoughts if you're having, and really feel those thoughts. And so I was feeling that hate my job type thought. And so I prayed, because I'm a praying person, and I asked God to please give me some guidance. And the question popped in my head: what would you do if money didn't matter? And at the time I thought, well, if money didn't matter, I'd open up like an indoor sports arena or play music or something like that. So I called my wife and I said, hey, babe, obviously I'm miserable in my job. What could you see me doing if money didn't matter? And she said, well, if money didn't matter, I could see you opening up an indoor sports arena or playing music or something, which is, we had never talked about that before. So long story short, I realized that my gifts and my talents and the vehicle that I could use to make money not matter was to buy passive income assets, to buy real estate. And so I doubled down on that strategy. I was, very quickly within 12 months able to quit my job and to just rely on that passive income. And furthermore, I was able to, in 2 years from that time, I was able to open up an indoor sports arena on the North Shore of New Orleans. And the next year I opened up another one on the South Shore of New Orleans. I've sold those since, but now we've got over 200 million in assets under management. So that's what kind of set me on that train. But to answer your question, what was the first asset I bought? It was a owner financed fourplex that I bought for $230,000. I got a second mortgage on my house in order to pay for the down payment. And then I sold it 3 years later for about $500,000. So it kind of gave me a taste of what I could do on a larger scale in real estate.
So that was your first investment, if you will, other than your primary residence. So when did you get into syndications? And did it just happen naturally, or is it something you knew like, okay, I know I want to go this route?
Yeah, so we first did a round trip with, as soon as I got good at doing real estate on my own, this is like small multifamily, single family flips. I did a lot of foreclosures, lease options, pretty much everything in real estate on a small level from 16 units on down. I did that for about a year to where I said, I need to scale this up even more. So I set up a $25 million portfolio through other people's money. These were just friends and family, and that was very successful. The indoor sports arena I set up through a syndication as well. That was very successful. I've exited both those, that 25 million portfolio and the indoor sports arenas. And then we started this larger syndication, mostly value add apartments, 100 units plus.
And in what geographies?
Yeah, so we're in Louisiana because that's where we are. My business partner, Preston, who's the COO, is in South Carolina. So we're in the Carolinas as well. We're in Texas. And we've got some stuff that we're looking at in Florida. And we've got some stuff in Illinois as well.
Well, I'd love to step back and talk about, you obviously followed your passion after you quit your job and you did the indoor sports arena. Why don't you give us that story? How did that all come about? I mean, did you have a full business plan and know what you were going into there, or did it just kind of come organically and grow into the two locations?
Yeah, so no, I did. I hired a consultant. I'm a firm believer in paying for value and paying for time and paying for knowledge and paying for a learning curve. So I hired a consultant because you don't know what you don't know. And actually, that's why we named our company Servio. Servio means to serve. I hired this consultant, and I thought he was going to give me a feasibility study. And the first day, he just gave me a quote to think about. And at first, I was a little upset because I was like, "Look, I'm paying you to give me a feasibility study." But the quote was from Albert Schweitzer. It said, "This much I know: those of you who will truly be happy will be the ones who have sought and found a way to serve." And so that's why we named our company Servio, because that's part of our mission is to serve people, and we believe that the more people you serve, the money follows.
Yeah, that makes a lot of sense. Did you ever get the feasibility study?
I did. Yeah, it was actually a pretty good feasibility study. It was a fun venture. It was something that was a dream of mine. It was something that was, that I was supposed to do at that time, but I've moved on. I've since sold them. I realized through that process that I really enjoyed owning it. I didn't really enjoy operating it. Because 50% of your customers win and 50% lose. And so you're dealing with a lot of customer complaints in that industry, but real estate has been the tried and true strategy for me that we've just scaled up.
Yeah, that makes sense. And so talk to us about what the upcoming years look like for you.
Yeah, so we're currently at 200 million. Within the next 2 years, our aim is to be at over $1 billion in assets under management. We've got a variety of funds, one that we're wrapping up that I'll speak about in a second, and the opportunity that's still there. It's a $35 million fund that we're wrapping up the remaining 2 million on. It's already got 500 units within that portfolio. But then we've got some other funds in the future, including a development fund and a value add fund. We're looking at arbitrage deals, development deals, deals that minimize the risk and accelerate the returns in this current interest rate and insurance environment.
So, Ryan, and I'm excited for us to get into the fund here in a few minutes. With the company, though, what are some of your core values there? Yeah,
so it's funny. We just did this exercise, and you're always adjusting core values and operating from those core values, but. We really value creativity and problem solving, whether it's you've got a high interest environment. What do you do in that environment? Maybe you're doing creative financing. How are you finding opportunities where the insurance is so high? Well, we're looking at lists that have 6-month loan expirations, where we're tapping into those lists and tapping into the motivation of those sellers to find those deals. So creative thinking, problem solving, service is obviously that's the name of the company, is Servio. Those are some of the core values that we operate from.
Oh, we love it. So how does your company, how is it differentiated from other similar companies and even other companies that are launching funds or have funds?
Well, I would say that we follow a set blueprint that has a track record of success, but we play in more blue ocean type areas, whereas a lot of people are playing in red oceans where there's a lot of competition. We tend to see things differently and find opportunities that nobody else is finding. Maybe other people are passing them up because they don't understand what the opportunity is. For example, we do hotel to apartment conversions. We have one that we bought for $2 million. We put $8 million into it. It was 270 units. We converted it down to 217 units. And it's almost fully leased, and it's been valued at 21 million. So that's 10 million in profit in just under 2 years. So those are, and while providing affordable housing solutions to the communities that we're in. So again, just serving the most amount of people, both the investors and the communities. So we tend to look at things different and find opportunities that a lot of people aren't finding in today's market.
Ryan, you mentioned some goals that you guys have coming up, and I happen to know from most entrepreneurs, numbers aren't really the goal, and it's usually something behind the numbers that's driving them. What is it that drives you? What makes you want to keep doing this?
Well, I think I mentioned, kind of my backstory a little bit was being stressed out at a job, and then just finding passive income and real estate as a vehicle to that passive income that really provided a solution. I got 5 kids, all boys. I don't know how to make a girl. And just to be able for me to provide passive income opportunities for other people with the same vehicle and the channel that kind of helped me get out of the rat race, that's kind of what wakes up and drives me. I like providing opportunities to people.
Yeah, that makes a lot of sense. I mean, 5 boys at home, how do you find harmony in it all?
They're actually the most peaceful part of my day. So yeah, they're great.
Yeah, that's awesome. How do you manage the work-life transition? Do you have a certain schedule that you keep in order to do that, or does it have to more do with the time in the moment?
Well, it is something that you just have to be intentional about. You have to be intentional about what you're doing when you go into work, and you have to have your priorities straight. I wake up every morning and pray with my wife. That's the first thing I do in the morning, just so that she knows and I know and God knows that, my priorities are straight as far as the first thing that I do during the day. And then, of course, in the evening, I try to be as present as possible. Yesterday, it was my second son's 16th birthday party. And I just let everybody know here at work that I was going to have to leave at 2:00 to sling him around on a tube with his friends on the back of the boat. So, you have to be intentional about your priorities and very intentional about your time management in order to manage it all.
Yeah, makes a ton of sense.
All right, Ryan, we're excited for you to tell us a little bit more about the fund and let the audience know. And before you do get started in that, we also want to let those that are watching right now that this is not an official offering. If you want more information about Ryan's fund, or you want the PPM, or you have any questions, Ryan will let you know throughout his presentation how to reach out to him and how to get the PPM. So Ryan, I'm going to turn it over to you so you can go ahead and share about this opportunity. Perfect.
Thank you so much. Let me go ahead and share my screen here. All right, great. So this is just an overview of the pictures. To coattail off of what she was saying, ServioCapital.com, that's where you can get the official PPM and offering and register to invest in this. It's total of 35 million was the raise, and we're at 33 already deployed. There's 2 million left. So this is actually a really great time to come into this fund, which includes a variety of properties, 500 units in total. But you have a benefit over the early investors because, as you'll see as I go along, a lot of these have already been sold. Previously, we're just paying off the lender. Once the lender's paid off, the lion's share of the sales go back to the investors. So now's a good time from a IRR standpoint and an equity multiple standpoint. And it's also good because, a lot of people, when they pitch a deal, it's like, we think we can do this. And so there's a level of speculation. Well, we're already doing this, and we've already done what we projected we would do. So it's a great opportunity to enter now. I kind of spoke a little bit about myself earlier, but that's a picture of my family, my 5 boys. Not sure if I'm going to go for that girl yet. I got to figure out how to braid hair, but if I do, it's game on. So we'll see what happens there. We're in a number of publications. We're a well-documented company, and this is part of what PREIshare did to make sure and vet us appropriately. There's a number of news articles about our acquisitions and some of the stuff that we've done. So you're more than welcome to check us out as well. I kind of mentioned all of this earlier, but in general, we specialize in multifamily, but we also do within multifamily condo conversions, whether it's apartment to condo conversions or a condo portfolio, and kind of buy by the acre, sell by the foot model, sell them individually, and hotel to apartment conversions that tend to generate a pretty good return. So what is the fund? It's $35 million, $33 million already invested. Our aim is a 2x equity multiple and a minimum of 17% IRR, although we're currently achieving well beyond those numbers. We provide both, I always say that real estate is quick nickel and slow dime strategies. You either pick quick nickel or slow dime. This fund includes both those quick nickel and those slow dime strategies. So you kind of get the best of both worlds. It also provides depreciation benefits. We can dive into that if you guys have any questions on that. But basically, we do a cost seg study on a number of these, which kind of accelerates your depreciation, your ability to write off your returns on your taxes.
Hey, Ryan, I'm going to just stop you right there, only because I know that many of the accredited investors out there, that's probably going to be a big sticking point. What does that mean for somebody that's coming in this late into the fund? Do they still get to take advantage of those?
Yeah, they're going to get to take advantage of it. We acquired 2 units, one just recently this year, and around February or March, and another one at the end of last year. I'm sorry, it was at the beginning of this year. And both of those, you're going to have the full benefits of the depreciation, which is basically 27 and a half years that the government allows you to depreciate an asset, condensed down to 7 years. So the lion's share of that comes in the first year. So our investors that are involved in this project can expect a pretty nice depreciation on their taxes next year.
It's a beautiful thing.
Yeah. So our arbitrage deals, these are, for those of you who are not arbitrage or familiar with arbitrage, it's just basically, you're able to take something that exists as one thing, like a hotel, for example, and say, well, it's not worth this as a hotel, but as an apartment, it's worth a lot more. So our deals we had Jefferson Place, that was a 136 unit condo portfolio. So instead of selling it as a portfolio, we bought it at $125,000 a door. We projected being able to sell it at $175,000 a door on the retail market, just basically selling them individually. There's an old real estate secret called buy by the acre and sell by the foot. And that's essentially what we're doing. We're buying them in bulk, got bulk package deal, and are selling them to individual owners for a higher dollar. We've currently overachieved that number. We projected 175 a door. We're currently selling them at an average of 200,000 a door. So we're overachieving our numbers there. California building, that's a 167 unit apartment. We looked at it and said, well, as apartment in a major metropolitan area in New Orleans, it's worth about 227,000 a door. But then we went into the condo market, and we saw that on average for the comparable asset, they were selling for $400,000 a door, nearly $200,000 spread on these. which is, that's amazing. Yeah, if you watch HGTV, if you've ever seen Flip or Flop, if they make 60,000 on a property flip, they're clicking their heels. They're pretty happy. But 30,000 is good for a flip. 20,000 even in this market is good for a flip. But we're at over $100,000 on 167 units that we have in a profit spread. I'll tell you in a second exactly how that property's performed. It's performed better than all the other properties in the fund. It's actually incredibly exciting what we've been able to do on that property. I'll get into that in a second. And then Wilmington, North Carolina, it's a hotel to apartment conversion. It's 116 units, and we're swinging hammers on that right now. Our value add apartments, these are apartments that basically we went in and said we could put a little lipstick on the pig and improve the community and improve the amenities and charge a little bit higher of a rent. We've got 44 units, Concord Apartments in Baton Rouge, Riverside at Oakbourne is in Lafayette. And then within the California building, we discovered these 1-bed to 4-bed conversions that I'll talk about in a second, but that's also our value add opportunities. Our arbitrage, we're modeling selling all of them within the first 3 years of ownership. Our value add, we're holding for 7 years for that depreciation. So again, that quick nickel, slow dime type strategy. So starting with Concord Apartments is the first one we bought. We bought this in all cash. We've got no debt on it. It's 44 units in Baton Rouge. We've already bumped the rents, and that's added values of about $4 million on this. We're going to hold it for 6 more years for depreciation benefits and project to increase the value to about $6 million.
Wow.
On Riverside Apartments, that's 53 unit apartments in Lafayette. We actually originally, when we saw this, we're like, this is the cheapest per door we've ever got a cash flowing asset. And we had to negotiate at 3.2. Well, the negotiation went stale, 90 days with a letter of intent out there. And finally they came back and they said, well, actually the owner that you were negotiating with died, unfortunately. But now his heirs are panicking because they have no idea how to run an apartment. So if you give us a cash offer, we'll consider a substantial decrease in price. So we ended up getting it for 2.6 million. We're already excited about 3.2 million, but we're able to get it for 2.6 million in cash. We have since our goal was to make some light renovations and the rents there, he hadn't increased his rents in 15 years. So people were still paying like $500 in a market where, they would go for $1,100. So we've already renovated several units and we're getting exactly what we projected in rent on those units. So they're all in the process of being renovated and leased up. That again, we're going to hold for a couple more years and get the depreciation benefits for the investors. Next is Jefferson Place. That's 136 unit condos in Baton Rouge. Beautiful area. I mean, it's tennis courts, 2 pools. The condos are beautiful. That's the one that we projected selling at 165 to 175, and we're currently selling for an average of 200,000. So we've already sold 16 units to date, about $3.2 million worth, and we're continuing to get sales.
Can I back you up on that one real quick? Just from a real estate perspective, when you're selling, many units in the same place, do you kind of slow those sales over time so you're not flooding the market, or did you kind of open them up all, as they came online?
It depends. So like on the residential market, you're going to slow walk those a little bit, maybe 3 or 4 at a time, because you don't want to oversaturate the market and then all of a sudden get, an accelerated days on market report for realtors to look at. And people wonder, why is this not selling? Why should I buy it? So there is a level, I think your intuition's right. Like there is a level of slow walking that, but we also put them on the market for investors to buy and cash flow. So people can kind of customize whether they want a duplex or a 4-plex or a 16-plex. And so we could sell them in bulk to, smaller investors that are buying smaller unit counts, and as well sell them to the residential. So it's kind of a combined strategy.
Yeah, that makes a lot of sense. On the retail side, I was helping somebody sell condos, similar situation, not as many units, but it was kind of on the residential side, listing one at a time, but then doing a duplicate listing over on the commercial side that had a fourplex available. And then that way you can negotiate accordingly.
Yeah. I mean, there's a certain strategy that you have to implement there. And that's what we've been doing. But Wilmington, so one of our top criteria is positive migration. And again, trying to solve problems in the market. Wilmington has a huge affordable housing crisis. I believe that they are in the top 10 of the highest rent growths in the entire country. They're expecting an additional 75,000 people by 2030. And the workforce housing is kind of getting pushed out of the market. Most people are having to commute in if you work at a restaurant or a retail center. So we're looking to just provide that solution there for the affordable housing. So currently we're finishing up the permits and doing the renovation. We expect to be online sometime this summer and start pre-leasing within a month. That one has a pretty neat spread. We're modeling it after that other one we did in Lafayette, where we ended up with about 10 million plus in net equity after we were done with the project. So we're looking just to replicate the process in Wilmington. All right, so this is the one that we're actually really excited about. This number has actually changed since this was last done. We've actually sold over 35 million since November in a market where it's probably the worst sales economy since 2008. We've sold over 35 million, and we have another 15 million under contract to sell in addition to that. And we've got 36 million more to sell past that. So with deals under contract, we've got 29.5 million in debt on this property. We'll have that, or we're projected to pay that off by this summer. We didn't project in our original business model to be able to pay that off until 2 years from now. And so we're only, what is that, about 8 months, 7-8 months into the project, and we'll have that debt paid off. And what that means with the 36 million left in profit, that goes straight back to the investors and starts paying their capital back. Kind of our secret weapon on this one was after we sold our first 10 million, we saw that our 2 1-bedrooms next to each other, they each sold for about 300,000. And then it was about $55,000 if you wanted to renovate those two to turn them into a 4-bedroom condo. Well, the 4-bedroom, the 4-bedroom that was a conversion of the 2 1-bedrooms, that sold for 1.4 million. So again, if you're, HGTVing it and you're looking at flipping opportunities, you've got something that's sold for 1.4 million, a direct comp in the building, and then 2 other units that you could get into it for $655,000. And at the end of the day, it's going to be worth $1,040,000. And so as soon as we discovered that opportunity, we'll put that out into our investor network. And immediately we got, close to 20 million under contract. And that's just what accelerated the sales on it. So, as far as an equity multiple, it's tremendous. As far as the opportunity there, it's tremendous. We're gonna end up making a ton of money on this building. And that's a key building in this fund. So if we sell another 10 million, just as an example, the investors will get 33% of their capital back right away. The way we have it structured, we're an 80-20 and an 8 pref. So as soon as you get all of your money back, you continue to have ownership and you own 80%, and you'll get 80% of all the profits after your money's already returned. So we decided, because of this opportunity and because it provides depreciation to hold it long term, and because the cash flow is so great on these 4-bedrooms, that we were going to buy from ourselves. We were going to buy 10 of these conversions. So that's part of the fund as well. We're going to keep 10. We're going to convert them to the 4-beds, creating $1.4 million in profit and over 10% in cash flow returns, also providing those depreciation benefits. Here's just an example of the conversion. This is what it is with the 2 1-bedrooms next to each other, and then convert it into a 4-bedroom. Okay, so how are we structured? The general partners, that's us, we get 20%. The limited partners get 80%. The way we structure it is with an 8% preferred return, meaning that before we get paid our 20%, you've got to get 8% of your money first. That shows you that your interest as an investor and our interests are aligned. Our goal is to pay your money back as soon as possible, your initial capital, so that we can begin to partake in those 20% of those profits, especially on the units that are selling out there. So just as an example, on the LP side, if you invest 100,000 and we have 15,000 to distribute, first, you are going to make 8% on your money for the year. That's $8,000. That means that $7,000 is left over. 80% goes to you. That's 5,600, and 20% goes to us. That's 1,400. So the LP in this scenario would make 13,600, and we would make 1,400. We want to get your investment paid off as soon as possible, because in that situation, instead of 1,400, we get paid 3,000. We get paid double, what we were getting paid before you're paid off. So that's just a great way to structure it. That's why we were able to raise 33 million relatively fast. Not include, not to exclude the opportunity on the actual real estate investments, but the way we structure it is very favorable to investors. 5 ways that you get paid is, number 1, through your preferred return. So that's a guaranteed 8% on your money. We aim to pay this monthly. It, of course, depends on cash flow needs. It could be paid quarterly or annually, but to date, we have been paying it monthly with no issue. And then the second way is cash flow. Past that 8%, if there's any money left over, past that 8%, then that is split 80% to you and 20% to us. And then, of course, a big part of the model within this fund is the sale of the condos. So as we sell or refi any of the assets, you get capital returned to you. And then you have accelerated paper depreciation through that cost seg. And then finally, at the final sale of these properties, you get paid 80% of the profit. How to invest? You do have to be accredited, and I'm sure your audience knows what that is.
We actually just released a video with Gene Trowbridge, an amazing attorney in the syndication space. And if you guys don't know that term, that's a great place to start, is go watch that video.
That's a good resource, Christian. Thanks for that.
Perfect. So you do have to be accredited. One of those government rules that in order to make money, you have to make money. But the minimum investment is 100K. Again, we only have 2 million left of the 35 million. You can go to serviocapital.com. From there, you can book a call to speak to Bress and myself. And as soon as you fund, your pref payment is calculated and you start getting paid right away. So that's it in a nutshell, folks. What do you think?
Wow.
Yeah, amazing. I mean, some of the things that I heard there is you're already paying back initial principal, it sounds like. At the very least, you've paid the pref. When you pay back that initial principal, essentially that's an infinite return should that happen. Now, I don't want to put any, numbers or, hold you to anything, but it sounds like just an incredible opportunity.
Yeah, and if I could share my screen one more time, if you book a call, we can send you this. And again, the PPM is on there, and this kind of shows you, the projected IRR on each project and the equity multiples. And typically what we do with Bress on a call is just kind of review the overall, portfolio averages. We always come up with a base model, which is like a stress tested model, and then our target model. So, we're looking at targeting 38% IRRs and over a 2.53x on your equity multiple. And Bress can walk you through all those scenarios.
Yeah, and the key here, if you guys are watching this, is, we are not broker dealers. We are not in any way getting paid, for this raise. We really are just promoting good sponsors out there. And while you're going to want to do all of your due diligence, you at least know that these guys have gone through the PREIshare approval process. And so, that gives you a little bit more peace of mind, or at least should incite you enough to do your own due diligence. But we always suggest, from a legal standpoint, just from a financial standpoint, go do your own due diligence, have the conversations with Bress and understand what you're getting into and whether it fits, your lifestyle and your investment strategies. Mm-hmm.
And Ryan, you provided your website. I don't believe you've provided your email yet, have you? Or yours or Bress's?
No, it's simply Brian@serviocapital.com, and you can reach out to me there. And then Bress's is Bress, BRES, @serviocapital.com.
And then they can also, whoever's watching this right now, can go to your website, serviocapital.com, and the PPM is listed on there, correct?
Yes,
right.
serviocapital.com.
You can also book appointments through the website as well.
Perfect.
All right, guys. Well, we really enjoyed having you on here. Great opportunity. It's fun to hear where you've grown in a relatively short amount of time, Ryan. It's spectacular what you're doing and what you're doing for other people and creating that freedom that you've been able to achieve through real estate and passive income. So thank you guys for being on here. And if you guys are watching this, thanks for joining us for another edition of the Fundication Show.
Thanks again for having us. And we do share the same mission in providing opportunities for others. So I appreciate you guys joining us in that mission.